The topic now is analysis of long-term assets, module 7. In terms of this long-term assets, if we move to the introduction section, they are the property, plants and equipments and intangible assets. Typically account for most issuers' assets and are employed to generate economic benefits for future years. Economic balance sheet would include a wide range of assets such as company reputation and its trained experienced workforce. Accounting balance sheet under US GAAP as well as IFRS permit recognition of narrow range of assets. Once a long-lived asset is recognized, either the cost or revaluation model are used for measurement. While US GAAP requires cost model, the choice of different methods and varying accounting policies for long-lived assets can create challenges for analysts covering different companies. IFRS requires expending research cost but allows development cost not pertaining to the software development to be capitalized under certain circumstances. US GAAP requires both research as well as development cost to be expensed. However, certain development costs related to software must be capitalized. So research, US GAAP or IFRS, P&L debit. If it is development phase, it may be capitalized under IFRS but must be P&L debit under US GAAP except if it is related to development of certain software. When one company acquires another company, the transaction is accounted for by using acquisition method of accounting, in which company identified as acquirer allocates purchase price to each asset acquired and each liability assumed on the basis of the fair value. Any excess of the purchase price over the fair value is recorded as goodwill. So when you are following acquisition method, the excess amount of the consideration that you have paid over the fair value of assets and liabilities that you've acquired is considered to be your goodwill. The capitalized cost of long-lived tangible assets and intangible assets with finite useful life are allocated to expense in subsequent period over their useful life. If you know the life, then apportion it over the useful life. For tangible assets, this is referred to as depreciation, and for intangible asset, it is called as amortization. Long-lived tangible assets and intangible assets with finite useful life are reviewed for impairment whenever changes in events of circumstances indicate that carrying value of the asset may not be recoverable. अगर आपको लगता है कि asset की value आगे नहीं आने वाली है, then you have to test it for impairment कि value of asset में कितनी कमती हुई है. Intangible assets अगर है जिसका indefinite useful life है, if you really know that the life of that particular intangible asset is indefinite, then it has to be reviewed for impairment on an annual basis, because indefinite life को आप कैसे amortize करोगे? Therefore, you have to test it for impairment on an annual basis. In contrast with depreciation and amortization charges, which serves to allocate the cost of long-lived assets over the useful life, impairment charges reflect the unexpected decline in the fair value of asset to amount lower than its carrying value. Fair enough. IFRS permit impairment loss to be reversed with the reversal reported in profit. US GAAP does not permit this reversal. We saw in inventory, even in for inventory reversal of the write-off of amount was not permissible under US GAAP. So the same principles applies for this impairment loss as well. The loss or gain on sale of long-lived assets is computed as sale proceeds minus the carrying amount of the assets at the time of sale. Fair enough. Now, when you acquire the intangible assets, before that, we need to understand what is the intangible asset. Intangible assets are non-monetary assets lacking physical substance. आप उसको स्टॉक के जैसे गिन नहीं सकते बिकॉज उसकी फिजिकल सब्सटेंस नहीं है. This includes exclusive rights. Let's say Geo has 10 years rights over IPL. That's an exclusive right which they have, such as patent, copyright, license which they have, or the trademark or franchisee. Under IFRS, identifiable intangible asset must meet three thresholds. When can you call an asset to be an intangible asset? If there are three definitional criteria, it has to be identifiable, it should be under the control of the company, and because of this and intangible, because you have certain rights, license, you are able to generate future economic benefit. Uh, in addition to recognition criteria must be met, it is probable that it is in future an economic benefit is expected to flow from the asset, and the cost of asset should be reliably measured. Okay, there are 3 plus 2 criteria. Goodwill, which is not considered as identifiable impairment intangible assets, arises when one company purchases another company and the acquisition price exceeds the fair value. Accounting for intangible assets depends on how it is acquired. आप इंटेंजिबल एसेट वैसे कैलकुलेट करते हो, उसके लिए देखना पड़ेगा कि वो अक्वायर कैसे हुआ था. It can be by 3 ways. Purchase in situations other than business combination. आपने acquire नहीं किया, but आपने खाली एक right acquire की. आपने इंटेंजिबल एसेट्स इंटरनली डेवलप किया. अगर आपने कोई पेटेंट इंटरनली डेवलप किया, एग्जांपल नाउअडेज दिस ड्रग्स इज वेरी फेमस व्हिच हेल्प्स यू इन रिड्यूसिंग योर वेट, द इंजेक्शंस. It's a patent which the company has developed internally. During the COVID-19 times, the company developed the drugs. So these are the drugs, and therefore this is a patent which is developed internally. And third one is if it is acquired in the business combination. So let's go into 3 of these aspects. If it is purchased in situation other than business combinations, it is like you are buying patent from someone. Then it is example that the famous, let's say Tata or let's say Geo, if they acquire a brand or something franchisee right for Tata IPL or let's say Geo IPL, then this is a license that you have acquired, and this is an intangible that you have purchased in situation other than business combination. And this amount of purchase, and if you have recorded it at fair value when acquired, uh, and it is assumed to be equivalent to the purchase price. If several intangible assets are acquired as part of group, the purchase price is allocated to each asset on the basis of its fair value. In deciding how to treat individual fair value, In deciding how to treat individual intangible assets for analytical purposes, analysts must particularly aware that the companies must use a substantial amount of judgment and numerous assumptions to determine the fair value of intangible assets. For analysis, understanding of the type of intangible assets acquired can often be useful than focusing on the value assigned to the intangible assets. Going on to the another point, if it is developed internally, construction cost of intangible assets. This cost of internally developed intangible assets are generally expensed when incurred. In some situations, the cost incurred is internally developed and intangible are capitalized. The general analytical issues related to the capitalized versus expending decision apply here, namely, comparatively across companies and the effect of the individual company's trend analysis. The general requirement that the cost to internally develop intangible assets be expensed should be compared with capitalizing the cost of acquiring intangible assets in situations other than business combinations. Because costs associated with internally developing intangible assets are usually expensed, a company that has internally developed intangible assets such as patent, copyright, and brands through expenditures on R&D or advertising will recognize a lower amount of assets than a company that has obtained intangible through an external purchase, right? अगर आपने दूसरे किसी से वही एसेट अक्वायर किया तो आप उसको कैपिटलाइज करोगे rather than doing P&L, which the other company would have done. In addition, on the statement of cash flow, cost of internally developing intangible assets are classified as operating cash flows, whereas cost of acquiring the intangible assets would be classified as investing cash flows. Therefore, there is a differentiation. Difference in strategy developed versus acquiring thus impact the financial ratios. तो आपके financial ratios different रहेंगे. In one, there will be a P&L impact. In another, there will be an asset impact. And because of this, even the cash flow will be showing a different amount in both the situations. IFRS requires expenditure on research. A research phase of internal project be expense rather than capitalized as intangible assets. And research is considered as original and planned investigation with the prospect of gaining new scientific or technical knowledge and understanding. The research phase of internal project refers to the period during which company cannot demonstrate that an intangible asset is created. For example, the search for alternate material or system to use in production process. In contrast with the treatment of research phase expenditure, IFRS allows companies to recognize an intangible asset arising from development expenditure for development phase of internal project. Application of research finding on other knowledge to plan or design for production of the new or substantially improved products. We have read this. Let's see the next item. An asset is considered to be impaired when its carrying amount exceeds its recoverable amount. IFRS, they define recoverability differently. In general, impairment losses are recognized when assets carrying value is not recoverable. Impairment can be of property, plant, and equipment. IFRS and US GAAP differ somewhat. Both the guidelines for determining the impairment has occurred and in the measurement of impairment losses. Under IFRS IAS 36, an impairment loss is measured as excess of carrying value over the recoverable amount. The recoverable amount is higher of its fair value, less cost to sell, and its value in use. The value in use is based on present value of expected future cash flows. The US GAAP assessing recoverability is separate from measuring the impairment loss. The carrying amount of asset group is considered not recoverable when it exceeds the undiscounted expected future cash flow. When it exceeds the undiscounted, उसमें डिस्काउंट करना है, इसमें अनडिस्काउंटेड एक्सपेक्टेड फ्यूचर कैश फ्लो से भी अगर आपकी वैल्यू ज्यादा है, then you have to test it for impairment. If the assets carrying value is considered not recoverable, the impairment loss is measured as difference between assets fair value and carrying amount. Now, impairment of long-lived asset held for sale. A long-lived, non-current asset is reclassified as held for sale rather than held for use when management intend to sell it and the sale is highly probable. जब आपको लगता है कि ये सेल हो जाएगा, तब मैं उसको held for sale recognize करूंगा. Additionally, AS requires that the asset must be available for immediate sale in the present condition. उसमें मेरे को ज्यादा कोई छेड़खानी नहीं करनी और मैं उसको बेच सकता हूँ. A building is no longer deeded by a company and the management intend to sell it. If the transaction meets the accounting criteria, the building is reclassified from PPE to non-current asset held for sale. At the time of reclassification, the asset previously held for use are tested for impairment. If the carrying amount at the time of reclassification exceeds the fair value less cost to sell, an impairment loss is recognized and asset is written down to its fair value less cost to sell. Long-lived assets held for sale cease to be depreciated or amortized. एक बार आपने held for sale कर दिया तब उसको आप amortize नहीं करोगे और उसको आप depreciate नहीं करोगे. After an asset has been deemed impaired and an impaired loss has been reported, the assets recoverable amount could potentially increase. ठीक है, एक साल बिका नहीं बट उसके बाद उसका अमाउंट सब्सटेंशियली इंक्रीज हो गया. For instance, a lawsuit appeal may successfully challenge a patent infringement by another company, which result that patent previously written down has a higher recoverable amount. IFRS permit impairment loss to be reversed if recoverable amount of the asset increases regardless of whether the asset is classified as held for sale or held for use. The IFRS permit the reversal of impairment losses only not the revalue, which helps in making it to the fair market value. Yes, IFRS do not permit revaluation to the recoverable amount if the recoverable amount exceeds the previous carrying amount. Under US GAAP, accounting for reversal of impairment depends on whether the asset is classified as held for sale or held for use. Under US GAAP, one impairment losses has been recognized for asset held for use, it cannot be reversed. In other words, once the asset is classified as once the asset value held for use has been decreased by impairment charge, it cannot be increased. For assets held for sale, if fair value increases after the impairment loss, the loss can be reversed. Okay. So if it is an asset which is held for sale, or if it is held for use, if it is IFRS or if it is US GAAP, if it is IFRS or if it is US GAAP, for held for sale under US GAAP, it can be reversed. Under IFRS, it can be reversed but not exceed recoverable amount. And if it is held for use under IFRS, it can be reversed. Yes. Under US GAAP, it cannot be reversed. Okay. A company de-recognizes an assets when asset is disposed of or is expected to provide no future economic benefit for either use or disposal. The company may dispose of a long-lived operating asset by selling it, exchanging it, abandoning it, and distributing it to the existing shareholders. Non-current assets that the management intend to sell or distribute must meet the accounting criteria immediately available for sale in current condition and reclassified as held for sale. Now, what you do when you are disposing it of other than by sale? Are classified as held for use until disposal or until they meet the criteria to be classified as held for sale or held for distribution. Long-lived assets continue to be depreciated and tested for impairment unless their carrying amount is zero, as required for other long-lived assets owned by the company. And when it is retired or abandoned, the accounting is similar to sale except that the company does not record cash proceeds. Assets are reduced from the carrying value of the asset at the time of retirement, and a loss equal to the carrying value is also recorded. If you are exchanging an assets, एक एसेट दिया उसे हमने दूसरा एसेट लिया बाटर. Accounting for exchange typically involves removing the carrying value of the assets given up, adding the fair value of assets acquired, and reporting any difference between the carrying value and the fair value as gain or loss. The fair value used in the fair value of the asset given up unless the fair value used is the fair value of asset given up unless the fair value of asset acquired is more evidently clear. Nobody will give you a higher value property against your value which is of the smaller property. So in case of barter, generally we will consider that the value of the property that you given up is same as the value that you are getting. But if you know that the value of the property is getting is much higher, and if it is much evident, then you will consider that value. When spin-off occurs, typically the entire cash generating unit of a company with all the assets is spun off. If you spun off the ownership in Ferrari, prior to the spin-off, FCA had sold 10% of its ownership in Ferrari in an IPO and recognized an increase in shareholders' equity. The difference between consideration it received in IPO and the carrying amount of the equity interest sold. In contrast, spin-off, in which FCA distributed its ownership in Ferrari to the existing FCA shareholders, did not result in any gain and loss. Coming on to the next topic, the presentation and disclosures. Under IFRS, each class of property, plant, and equipment, a company must disclose the measurement basis, depreciation basis, and useful life. In addition, disclosure of restriction on the title, pledges of securities to acquire the property are required. If the revaluation model is used, the date of revaluation, details of how the fair value was obtained, carrying amount under cost model, and the revaluation surplus must be disclosed. The company must also disclose the depreciation expense for the period, balances of major classes of depreciable assets, accumulated depreciation. Under IFRS, for each class of intangible assets, a company must disclose whether the useful life is definite or indefinite. If finite, for each class of intangible assets, a company must disclose the useful life, amortization rate, amortization method, gross carrying amount. When amortization is included in income statement, a reconciliation of carrying amount at the beginning and end of the year is to be provided. If it is of indefinite life, they should disclose the carrying amount and why it is considered as indefinite life. Under US GAAP, companies are required to disclose gross carrying amount and accumulated amortization in total and by major class of intangible assets, the aggregate amortization expense for the year, and the estimated amortization expense for the next 5 fiscal years. Gross carrying amount and accumulated amortization in total by major class of intangible assets. Aggregate amortization expense for the period and expense of the next 5 period is also required. That's an interesting point. US GAAP, 5 years projection is required. The disclosure related to impairment losses also differ under IFRS and US GAAP. A company must disclose for each class of asset the amount of impairment loss and the reversals of impairment losses recognized in the period and where those are recognized in the financial statement. Okay, perfect. Perfect. Under the nature of expense method, the company aggregates expenses according to the nature, depreciation, purchase of material, transport cost, employee benefit, and advertisement cost, and does not relocate them amongst function within the entity. Under the function of expenses method, a company classifies expenses according to the function, for example, as part of cost of sales or COGS. At a minimum, a company using function of expense method must disclose cost of sales, but other items may vary. The Bloomberg FLDS functions allows you to view Bloomberg's data fields, including different depreciation methods for plants, property and equipment, and impairment and revaluation for public companies. FLDS Go is your hub for exploring Bloomberg data, providing a breadth of fields for legacy APIs, and Bloomberg query list is one centralized location. Okay, this is good to know. I don't think much more than that is required. The next topic for learning is topics in long-term liabilities and equity.